With our trades, we turn to Malcolm Etheridge. He's CIC Wealth Executive Vice President and a CNBC contributor. Malcolm, welcome. And we'll start with DraftKings, up about 2.5%. The stock was a beat and raise on results. How do you feel about being an owner of this one?
Yeah, I consider that one a buy. I don't own it personally, maybe just yet, but coming off a strong Q2 earnings report where they not only beat expectations, but also raise guidance for the remainder of the year. And who doesn't love a beat in the raise? Plus, they're heading into football season, which I know is prime time for their business model, right? And it's when they tend to see bigger bets and higher profit margins. So I think if they can finally make this the last year of losing money and finally turn a profit heading into 2024, DraftKings might actually have something here.
Stock up nearly 3% right now. Up next, Booking Holdings, the stock making big gains after robust second quarter results. The CEO telling CNBC the company sees no signs of travel demand slowing. So, Malcolm, what do you think?
Yeah, I consider this one a hold. I saw Glenn Fogel on the network this morning touting the blowout earnings quarter they just had. And in fact, on the call, they said it was a record-breaking quarter. But my concern is the mixed picture we've been getting from the airlines as far as international versus domestic travel. Plus, I think the excitement is going to fizzle out in the back half of the year as the consumer runs out of firepower, right? And a willingness to spend at all costs like they have been. And so we've already started to see some of that happen in retail and dining numbers coming out of Q2 earnings. I expect travel to also be on that same list.
Ooh, okay. Let's turn to Block then, where we see, talk about pressure. They're down more than 12%, even after they reported pretty strong quarterly results. What do you think is going on? Would you be a buyer here?
I'm with the crowd. I consider this one a sell. Despite the strong Q2 earnings it just posted, I think it's easy to just look at the sell-off that happened and say, PayPal reported, and so they're just a victim by association. But I think the guidance they gave for the rest of the year doesn't sound as good as the first half, and that shouldn't bode well for Block shares going forward either. They still have to address their shrinking margins, which won't be easy to do since their customer acquisition costs, they still haven't been able to get those under control. I know that they had good numbers and increase in subscribers for Cash App, but at what cost? And so admittedly, I'm not all that constructive on the payments names altogether, but this is one that it would be at the bottom of my list if I was going to buy into that sector.
Would that extend to Square then? As you mentioned, you're kind of concerned about the whole area?
I'm concerned about PayPal. I'm concerned about Square/Block or whatever we'll call them later. And I think the ecosystem in general, the acquisition cost for that next customer who doesn't already know about these services is just way too high to be constructive on the space and decide that now is the time to put new capital to work in that sector.
We're looking at the Dow turning negative by 75 points now. What is your overall view of the market today in light of a week where we've seen U.S. debt downgraded and on the other hand, a very sort of Goldilocks-ish jobs report?
Yeah, I think coming out of Apple's earnings yesterday, we got about what we expected to get. They didn't have the best guidance. They didn't have the best revenue numbers, and the market is responding in line with what Apple's share price is doing simply because they reflect so much of the market and say a lot about what they expect consumer strength to be.
Yeah. All right, Malcolm, thanks very much. We'll leave it there for now. We really appreciate it.